So after 3 arrows blew up, Sue and Kyle gave an interview on Bloomberg on the GBTC trade. And if you guys, I don't know if you guys remember that interview, but they defended their strategy and they said it was impossible to predict. The reason that they blew up is not because they did anything wrong. It's because it was impossible to predict that so many other people would follow them into the trade. So the trade got too big, essentially. Is there any similarities with Kyle and Sue saying, look, we were just doing this trade. We didn't realize this trade would grow in size by 100x. Any similarities with that in 2021? And maybe you could replace Sue and Kyle with maybe Saylor or someone else here. Any similarities or different structure?
I mean, I'd say like there's a difference in leverage for sure, right? Like I think you can see the cap structure of MicroStrategy. It's public. See how much debt they have. Their debt to equity is far less than some of these levered trades, these basis trades from last cycle. That's one consideration. I mean, the other consideration is that these are companies, right? So they're companies with like shareholder rights and governance processes and things like that. And so you could see a situation where some of these companies trade at a discount to their NAV, their holdings. But what happens in traditional markets when that happens, right? Like the companies go out and they sell those assets and they buy back shares.
Just buy back the stock, right?
Yeah, or somebody else comes in and does a takeover. They just buy the company and then they have majority voting rights and then they liquidate it or something like that.
That's interesting because I don't know if you guys saw what Morpho did the other day, but they came out and they basically said there's only going to be one token. And there's this problem in tokens where you have no legal rights, you have no claims, you don't know if the company's going to launch a second token. There's all these issues, right? So I actually wonder if the reason that investors love these public companies is because you're actually putting it's actually the legal framework of a company around the token.
I think so, right? Like if you think about it, it's actually a lot easier to operate in crypto as a venture firm that's holding sort of like a promise of upside in the future in terms of like either equity or token warrants or something like that than it is to be like a liquid fund where you're constantly taking like operational risk and you're custodying assets that could get hacked, So yeah, I mean, there's something to be said about this sort of simplicity of just having shares in your Robinhood or your Fidelity account, right?
Yeah, I've always kind of had the thought that there's been a lot of fight about like whether crypto tokens, et cetera, like securities or not. But I kind of think like it's not necessarily a bad thing if like a lot of tokens are just deemed securities and just fall under security regulation, because I think actually does create a set of rules that everyone can kind of follow by and abide by. And there's a very large pool of capital on the sidelines in the securities markets that historically haven't been able to touch crypto, because it's been kind of like an undefined asset class, and if it actually are just deemed securities, and that in theory that pool of capital can actually flow into crypto and participate within the asset class, and maybe that's a pool of capital that's needed to ultimately support like prices and everything else.